Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty podcast. Excited to be here today. We have an awesome show lined up for you. First and foremost, we have a market update. And of course, all the strategies and things that you need to know about real estate investing with my good friend, Lauren Taylor. That's what's coming up after my market update. And then two interesting topics. Number one, the top 10 cities where vacation rentals will rake in the most cash. So if you want to make a lot of money using vacation rentals like Airbnb, those types of services, we'll talk about that. And then last but not least, my take on what you can do to build wealth with turnkey rentals. All of that's on the show today. Really excited again to be here. Today's podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. So here's the market update. The share of distressed sales continues an annual decline. Is that a good thing for us? Is that a bad thing for us? You tell me. Total distressed sales, bank-owned REO sales, third-party foreclosure and auction sales, and short sales accounted for 14.2% of all single-family and condo sales in the first quarter of 2019. And that's up from 12.9% in the previous quarter, but down from 15.2% in the first quarter of 2018. Okay, among 135 metropolitan statistical areas with a population of at least 200,000, at least 100 total distressed sales in Q1 of 2019. Those with the highest share of total distressed sales were Atlantic City, New Jersey, Trenton, New Jersey at 28%, Rockford, Illinois at 27.3%, Peoria, Illinois, I haven't been to Peoria in a while, Peoria, Illinois at 26.1%, and Shreveport, Louisiana at 25.9%. But I'd like to know what's happening in your neck of the woods. Get in touch, go to thinkrealty.com and shoot me an email. And I'm always interested in learning what's going on in your city so we can talk about it and see if there are investment opportunities. Let's jump to Lauren Taylor. And Lauren Taylor, welcome to the show. How are you?
I'm doing good. What about you?
I'm doing well. So I know you really well, and we've connected obviously over the last couple of years, but our audience and our viewers don't know who you are. So give me a little intro, your background, who you are and what you do.
Yeah, so I'm mainly on the institutional side of real estate. I own a brokerage company, a renovation company, and a property management company. So we're basically a full-service operations arm for institutional, mainly single-family rental investors. And that's primarily been my background for the past 8-9 years or so. And we started in late 2017, very fast growth, which is great. We're headed into our own capital raise now, and we're really excited about that. So that's a very short snippet.
No, I love it. And I mean, you are, we've done a lot of interviews together in the past as well. And if there's one thing that I know about the great Lauren Taylor is that you follow real estate news like it's actual good data, and there's you geek out on it, I geek out on it, and just during the market update, and we talk about total distressed sales, for example, bank-owned REO sales, third-party foreclosure auction sales, and short sales. It says that it's accounted for roughly about 14.2% of all single-family and condo sales in the first quarter of 2019, and that's up from 12.9% the previous year, but then down from 15.2% in the first quarter of 2018. Is this a good thing? Is this a bad thing? What should my perspective be as an investor?
Yeah, so I think it's interesting because way back, God, how many years ago was it? We were doing podcast series before.
Yeah,
I've been thinking that a downturn is coming. It's like a crying wolf over and over again. So now I'm to the point of I don't even know when it's coming or if it's coming. It definitely is, but we are seeing an uptick. There was a recent study that just came out that shows that judicial states are significantly higher in foreclosures right now than non-judicial states are, which I think is
why is that? Let's hone in on that for just a second. Why are the foreclosure rates in judicial states higher than non-judicial states?
part of it is process. So you have to take into account that it's not just the fact that there's more foreclosures. It's also that inventory takes a lot longer to get through the foreclosure process. So if I'm in a judicial state, then they have to sue me to get my mortgage back. So it's essentially like more like a car loan, instead of in a title theory state or non-judicial state, which the foreclosure process is much faster. So when you heard about robo signing and stuff during the crash previously,
Yeah.
all of that were in non-judicial states, because in judicial, like South Carolina, for example, you have to go through an actual lawsuit. So there's a less pendants involved.
Totally makes sense. And if I'm an investor, should I be looking at more judicial states or non-judicial states to take advantage of opportunity?
I think that is depending on the particular market. Most of our markets are judicial, and that's kind of by design and a little bit by happenstance. But I tend to think that there's a lot of opportunity in those states, because most of your judicial states are also more rural, and most of your more rural or third tier markets, to me, are performing better now. There's less competition. The inflation isn't as out of control as it is like where you are in Atlanta.
Yeah, that's right.
There's a good,
Hide.
still kind of healthy market
Yes.
that people can take advantage of. I think the biggest thing right now for us is diversifying to make sure that, and this is an old tried and true statement, but anything that we are going to buy, that we have multiple exit strategies for it. So if we have a bunch of flips running, I need to know that I can also convert them to rentals, or that I have another exit strategy or the ability to hold it for longer. So I'm kind of cautioning investors from making sure if they're doing hard money that has time limits on it, they have a concise exit plan, because I think that's going to be one of the most difficult things. If it takes a downturn, you're going to have a bunch of people that have cash, just like you did before, from lenders who those notes are going to come due, and that becomes a problem.
So where are we in the market today? There's a lot of this doom and gloom talk. I feel like people want there to be a crash. I'm now going to meetings and they're saying, you've heard about the recession that's coming next year, right? And I'm like, no, please elaborate. I'm a new real estate investor, right? Like, help me understand what you mean. Why is there so much talk about a recession coming? Is it just because we haven't had one in the last 11 years? And we talk about this inflation in different cities, your primary markets, like you mentioned, Atlanta. It's definitely a little overpriced depending on the neighborhood. It's harder to find deals. Inventory sucks right now. Is that why people are saying, well, you know what? We're due for one. It's going to happen. And then just artificially creating this thing that we call a recession?
I think that it's a lot of things kind of coming to a head together. So you have a lot of fear within the real estate space, because typically the real estate market is kind of predictable. So if you looked at it over the course of its existence in the US, in about 7 to 12 year stints, roughly, we have dips or mini recessions of some sort that could be caused. The last one was caused by mortgages, so that's why it was called the housing crisis. We've had things associated with tech, with industrial, like all different types of recessions, or things that have caused recessions before. But real estate in and of itself is feels like it's coming to a head. And when you start to see lending requirements go down, inventory shortages, it feels very similar to a previously overheated market. And so I think a lot of it is fear-based, but you put that together. I was reading an article this morning that was saying we're about 16 trillion in printing money to avoid a recession. So there is a lot of false inflation in the market that we're seeing that is also a concern. So it's pretty widespread, I think. People are concerned about the student loan debt, credit card debt. There's a lot of different industries that seem to be stable right now.
Yeah, that's right. I mean, you even have your subprime auto loans, right? Like that's just an entirely different beast. Like you said, student debt, right? I was looking at my alma mater, University of Michigan's out of state, all in year after year. That's $60,000 a year, right? So times four, you're all in at $250,000. Like that is a rough ride, and
Yeah.
I don't even know what I would do with that. That just sounds really crazy. So I'm looking at these indicators and I'm listening and I'm paying attention. What should I be doing as an investor right now?
I think you want to stay educating yourself and watching your market is the most important thing, because if you're allowing the market to just do things to you, I think that's really what happened in the last recession, was that people weren't paying attention. And when you start to see things grow and grow and grow, which is really what you're seeing with debt in general, whether that's housing debt, car debt, student loan debt, credit card debt. There's just a lot of debt. And so as this thing gets bigger and bigger, it has to come to a head in some way. So making sure that you are making smart investment decisions and not over leveraging yourself, I think is the biggest thing. Like watching all of these builders do exactly what they did before is, you know, I have to sit back and think like, what are they thinking?
Yes.
I know that they feel like it is not going to happen again, but you have to look at actual market trends to see red flags that could cause you problems down the road. So I would make sure you have multiple exit strategies, not over leverage yourself.
Yeah.
And just kind of keep a pulse on the market.
Do you think that a lot of what's going on in terms of activity with these builders saying, well, geez, you know, I have to sell my home a little more expensive, and it's a little bit of a barrier to entry for some of these first-time FHA home buyers because cost of doing business is higher, meaning the cost of labor, the cost of materials, permits are taking longer, the cost of carry, and so now you have to inflate these prices to recoup your investment, number one. And then number two, you have the rest of these folks around the country ringing this home affordability bell. And now you have lenders saying, well, here's a zero down program for 30-year something or whatever. And they'll come up with like this crazy program.
Mm-hmm.
That's what I'm seeing. And I'm definitely a little concerned. But I don't see a lot of lenders going down that route just yet. And I do feel like if they do, then we have some real crazy cause for concern. But like you also said, we're so in debt that has to catch up at some point. So it's like, I feel what people are saying at the meetups and then at the conferences, but then I'm also like, well, maybe another 2 years. Do you have like your crystal ball? Like, can you pull out the crystal ball from like behind you or somewhere and like tell me exactly what?
Yeah, you know, I think the biggest thing that I'm seeing now is more related to really, like I said, like all of these things coming together, and so you are seeing lenders do stated income, stated asset products again. Making the same mistakes that we attributed the crisis to before. And as you watch this progress, the biggest concern that I have is that inflation is happening in cost of goods. So in homes that we buy, in really every sector, rent prices are unbelievably inflating year over year. But we're not seeing any inflation in pay. So that has to tell you that there's false inflation. So you're not seeing big jumps in the availability of jobs or in pay for the public. So things are getting more expensive, but they don't have the means to support those things. So those are always red flags to me, that a market can't sustain overall unaffordability. So like we have an affordability crisis with everything, not just housing.
So then why do I see so many cars in the parking lot of like these super expensive malls, and they're filled at 2 o'clock in the afternoon on a Tuesday? Like, what's
Yep.
going on? Is it just people are just like, hey, it's plastic. Let me just swipe it and then I'll deal with it 3 months later.
Yeah, this is a rabbit hole, so we won't go too far. But
Yeah.
to me, it's a financial literacy problem.
Yes.
People don't
Totally.
understand debt, they don't understand financing, and so they're taking on more and more responsibilities because now the idea of money is not tangible. So if I have the resources available to me, it doesn't feel real. And so people are charging things and building up debt because the credit industry is making it more readily available. But the public has never been educated on what the impact of that is, or when you have groupthink within an entire society that believes that debt is not real money, what that can do to the economy and to their families long term. To me, it just
Yeah.
really goes all the way back to like elementary school. Like no one's taught about money anymore.
Yeah, I'm sitting here like biting my nails, being super nervous about that, right? Because you take a look at the long-term effect on this, and we are failing our future generations by not
100%.
explaining to them what the difference is between good debt, bad debt, how to use credit cards, why not to sign up for the first $10,000 credit line that you get from XYZ Bank, right? It's just not a smart thing to do if you don't know how to use it wisely. So I wanted to ask you more framework questions and multifamily versus single family and all that. We do not have the time for that, unfortunately. We got to go. But if I want to reach out, Lauren, what's the best way that I can do so?
Yeah, you can find us on Instagram. It's at the Realty Haven or at Realty Haven. I'm on LinkedIn. People can reach out through our website, which is therealtyhaven.com. And I'm on the majority of social channels, so you can find me any of those places.
Awesome. Lauren, thanks so much for joining me. I appreciate it. It's been fun.
Thank you.
You got it. Think Realty Nation, get in touch with Lauren Taylor. You can find her anywhere online and also at www.therealtyhaven.com. She's an awesome person doing wonderful things in South Carolina. You want to make sure that you get in touch and just follow her journey as an investor and what she's doing. She's one of the nerdiest, geekiest, awesome people that I know that actually has tangible information and tangible advice based on data that she assimilates on the weekends. We'll be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Check them out. Go to www.turnkeyrealestateinvestments.com. All right. The top 10 cities. If you are in the vacation rental business and you want to make some serious cash, here are the top 10 cities, starting with number 10. Which is, if I can read my notes properly, number 10 is Tucson, Arizona. I've never visited Tucson, as I'm more like a Phoenix kind of guy. But Tucson, Arizona coming in at number 10. Number 9, Austin, Texas. Number 8 is Tulsa, Oklahoma. I haven't been to Tulsa either. I've heard a lot of good things about Oklahoma City as really good SFR plays, but I haven't thought of Tulsa as a vacation rental place. But it looks like it's coming in number 8, which is always good. Number 7, Santa Ana, California. Number 6 is Nashville, Tennessee. Number 5 is Honolulu, Hawaii. A little too expensive for my taste and a little too non-mainland. But you know what? It's still a great city to visit every now and then. Number 5. Number 4 is Miami, Florida. Number 3, New Orleans, Louisiana. Number 2, Orlando, Florida. You want to know what number 1 is? Scottsdale, Arizona. Now, this is one of my all-time favorite cities. I love Chicago, New York. I'm not a huge fan of LA just because of the traffic, but I love Scottsdale because it's just desert. And it's amazing. And the temperature is beautiful year-round. Outside the occasional dust storm, you still get a good spa experience every now and then. All right. So those are the top 10 cities. What I did want to talk about was this entire concept of turnkey rentals. And every now and then I get a question in my email about how I can start building wealth today. Not tomorrow, not 10 years from now. How do I do it today? And if you don't have the appetite to do your own renovations, like I don't anymore, I can't stand doing my own renovations and I don't have the patience for it. I can't deal with that. Sorry, not going to happen. A turnkey rental is a really good opportunity for you. So here's what I suggest. Find some good operators like Narada Real Estate Investments. They have a good handle on turnkey real estate investing, and they can coach you along the way. Even if you're paying a little bit of a premium, as long as your cash flow numbers work and they're realistic, and on a worst case scenario, if and only if you feel in your gut that it's a good buy, then do it. There are a lot of turnkey operators out there that also will swindle you, so you want to be very careful of that. That's why I trust Marco and I trust Narada Real Estate Investments. You want to get in touch with them again, www.turnkeyrealestateinvestments.com. But single-family rentals, you pick up one a year, pick up two a year for the next 5 or 6 or 7 years, and you're set for life. That's the show. If you have any questions for me, get in touch. Go to thinkrealty.com. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring turnkey occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. Think Realty Nation, until next time, happy investing.